Hello, hello. I'm Madeline Rinbarger. I'm on the Newcomer team here, and I'm super excited to sit down today with JPMorgan's Melissa Smith, the co-head of the innovation economy. Did I get that right?
Yes, thank you for having me. Good to see everybody.
This is probably going to be a similar question for many panelists, but I have to ask you because you had a specific experience with this, right? So walk me through what the morning of the week of Silicon Valley Bank's collapse was like for you. I mean, what do you recall when it first began unfolding? What was your decision-making process? Did you set up a war room or stay on the sidelines? You had your strategy, but I'd love to hear it firsthand.
Sure, absolutely. So the first thing I would say is just sort of, recognizing obviously it was a very stressful and uncertain time for everybody in this room and many people not in this room today. And I think, that's important obviously to acknowledge. Secondly, I would also just say that it is never helpful for any financial institution, big, small, no matter what the case, to see another financial institution in distress. So that is just bad for the system as a whole and not something that we would wish upon anyone. And that's an important point because as we started seeing things sort of happen that week and those, eventful days, first and foremost, we very much instructed our teams to not make any outgoing phone calls. We did not want to in any way be seen to be exacerbating an already difficult situation for another financial institution. So that was kind of the first thing that we did. Then we were seeing a lot of companies and founders that were calling us specifically. We are often seen as a port in the storm, hence the title. We are more than that, but we can talk about that. And so, our first kind of order of a business was to support those companies sort of coming our way. And I think, they were coming to JPMorgan also because, we've been building this innovation economy business for quite some time. And so we already sort of had a reputation in the market, if you will. Mm-hmm. So first order of business was to serve those clients and to onboard accounts so that they could move money if that's what they were choosing to do. Then secondly, I would say in sort of the weeks after, right, was really just making sure that we were out and about getting to know all those clients. A bunch of them we already knew, we'd been calling on in the past, but really welcoming them to JPMorgan. We hosted a series of events sort of around the country. And the third thing that we did was then sort of taking stock of sort of what our business looked like post, that March time frame, and really thinking about how we should accelerate some of our existing investments that we were making in the business, including hiring a bunch of bankers to serve the new clients that had come our way. So that was really kind of what it looked like for us.
Yeah, makes sense. And then I guess like you mentioned, after the crisis, you ultimately did take on many new bankers to serve this space, some of which I'm assuming came from SVB, right? So was that kind of a conscious strategic move to help court your client base's existing focus in the innovation economy, or kind of felt like people needed a home and you were there, right? So
we ultimately, last year hired about 200 bankers globally to serve, again, an expanded client base that we had. And, quite frankly, we wanted to just hire the best talent out there, whether that come from SVB, from other firms, whatever the case may be. So we were certainly happy to welcome all of those new colleagues into JPMorgan, clearly given, I think, the reputation that SVB had in the market. Clearly, that was a place where we, certainly found a lot of our new colleagues.
Yeah. And then in terms of SVB's customers, I mean, traditionally, historically, larger banks have not been known for their agility in the way that, SVB was sort of special in the ecosystem and is still special in the ecosystem for those products and those features. So I guess how did that all come about? It was a quick weekend, and I know you had been ramping up, but then all of a sudden it was go time, I guess. So how did you maneuver through that?
Sure. So I guess I would just step back for a moment, just in terms of, again, the fact that we had been building this innovation economy business to serve everywhere from startups to later stage companies really since 2016. So it wasn't about ramping up per se. It was sort of following along an already, well-established business and sort of prescriptive business plan and sort of accelerating that. But I think, again, we wanted to just make sure that we were the best set up from a resource perspective to serve those clients' needs and continue to invest in sort of the product and solution set that we have to serve the earliest stage businesses.
Some of those services, being more flexible in time, I guess also the turnaround time was pretty quick for opening a lot of accounts, right? So how much is also security part of your pitch to clients, especially given for the regional bank failures that cascaded after this? JPMorgan is known as being stable, well, maybe not the fastest. So I guess, is that part of your pitch to these customers as you're acquiring them now, or was it at the time?
Well, I would certainly say, I think that, prior to the SVB collapse, and post, right? I think, having a banking partner that has a fortress balance sheet is sort of table stakes, right? But I think most importantly is having an institution as a partner that can really, again, help a company grow and scale. And we do believe that we are really one of the only firms that can truly serve a company from sort of startup to IPO and beyond. And I think, at the end of the day, sort of back to your earlier point about, big banks being viewed as big banks and not being as nimble. I think we would actually argue, one, it's certainly very important to have a dedicated business and dedicated group of bankers that are focused on this ecosystem specifically, that understand the unique needs and challenges of a startup, of a founder. And two, I would say, is just the benefits, quite frankly, of scale. And what we're building is, something that we don't think really existed before, quite frankly, which is being able to bring the resources, expertise to a startup in the same way that we bring it to a later stage company. So having the ability to kind of provide that to every company, regardless of size, we think is very important. And also just, the tremendous global capabilities and the ability to really build a global business. So we think that's a big differentiator in terms of our ability to serve clients through every stage of their journey, the kind of global nature of the business. And again, bringing that same expertise to a smaller size company that I think we're more known for, just sort of in the market as a whole, because when people think about JPMorgan, they tend to think about sort of our bigger businesses in terms of the bigger clients that we've served.
Yeah, I mean, I did kind of want to unpack that a little bit, because obviously you are moving earlier and earlier, especially with your innovation economy focus, but is there a sweet spot for you? I know Silicon Valley Bank was, could be the bank for even pre-VC funding, like the earliest stages. So is kind of your focus more to where like a later stage venture-backed company closer to IPO would be a sweet spot for you? Are you catering to offering products to people that are really at that inception stage at this point?
We absolutely are. And again, that was really one of the main reasons that we started building this business in 2016. I think previously, right, prior to that point in time, we had sort of naturally benefited from companies that were outgrowing the likes of some of the regional banks that serve this ecosystem in the past, because we did have very good late stage capabilities. And I think in 2016, where we really started focusing was making sure that we had the capabilities to serve the various earliest stages from formation, from inception. And so we very much are doing that today, and again, quite frankly, have been for quite some time. I would say, last year, post the SVB collapse, we had previously had bankers that focused on sort of, pre-seed and seed stage companies. We sort of doubled down on that effort with the establishment of our startup banking team. We hired a person from SVB who'd been building that business for years and years and years. And so that is, continues to be an important part of our strategy. But again, we sort of increased the size of that team substantially. We believe it's very important to be there at formation to serve these companies from the various early stages.
Yeah, I mean, I know also there was, of course, a story in the information last week where some venture capitalists and founders were maybe expressing difficulty switching over at that time, especially those that were at the earliest stages. So I just felt I had to touch on that. But are there product offerings or things that have shifted in the coming months or visions going forward to address maybe some of the concerns that were brought up in that piece, or just interests for like earlier stage founders, the products that they would
Sure.
want and the speed that they would want?
Sure, no, absolutely, and I think that is a big part of the sort of digital investment that we continue to make. I think last year in March, we had basically 2 years worth of onboarding volumes in a 2-month time frame, and so it was not the typical client experience is how I would characterize it. And so again, sort of the acceleration of that investment in our digital capabilities so that we do have 24-hour onboarding for a startup and for an early stage company, and continuing to sort of add to the value-added services sort of on that platform. So that's one, and that's a continued evolution every year that will continue to be an important part of our investment strategy. I think the second thing I would say in terms of sort of our offering as a whole is in October of 2022 we launched a digital capital raising platform. We think that's very important to help founders find investors in terms of smaller size capital raises, and doing that in a sort of a digital first way. So that's been a big focus area for us. And then the last thing I would say, with the acquisition of First Republic in particular, what was very complementary was their fund banking business. And so we now have thousands of emerging managers as clients that is very important to us to continue to support as well.
Yeah, I wanted to touch on the First Republic acquisition. That's a clear interest area for you. It seems like a very compatible merger there. How much of the First Republic business has retained on, both from customers or bankers that came from that point?
Yeah, so I would say a significant chunk has stayed, and I would note too, we haven't yet migrated the First Republic client base onto the JPMorgan system, so they're all still being served, if you will, sort of in their First Republic accounts, which is why it's hard to answer the question.
Right, harder to find a specific
exactly,
percent.
because they're all still there on their First Republic systems. But what I would say is, from a portfolio company perspective, there was a lot of sort of overlap in terms of a lot of those companies were either existing clients of JPMorgan as well, and or companies that we knew well and had a relationship with. So I think that is all, again, very sort of symbiotic, if you will, and we continue to sort of see a growth in that client base as we continue to deepen the relationship with them, given we have a much larger product and capability set than First Republic had on their own. So they might have had an operating account with First Republic and did some basic banking. We're able to do a lot more for them. So that's been a very successful, I would say, outcome of the acquisition. And then secondly, as I just mentioned, I think the biggest complementary aspect of the First Republic offering has been the emerging manager sort of fund banking business, which we're quite excited about.
Nice. Yeah, I was going to say, would the move from a First Republic client base as a company potentially grows or a firm grows, then there could be more services and products offered from the JPMorgan side? Is that kind of a vision that you see also for the partnership as it stands right now?
Absolutely. Absolutely. And again, just the focus on continuing to deepen that relationship given a broader product set that we have.
Yeah. Going forward, I'd love to hear what is in your focus in the next year or so in developing your innovation economy focus. Are you want to double down on more products that could be more or less competing directly with SVB in terms of earlier stage company setup, client services, that sort of thing? What are you looking forward to building in the next year?
Sure. So I think we would we all hope that we don't see another regional banking crisis. So that's first and foremost, that we hope to see a little bit more stability in the market this year. We're very focused simply on serving our existing client base and obviously continuing to be in the community and serve the ecosystem as a whole. I wouldn't say there's a specific product set, if you will. It's hard to, quite frankly, imagine a product or capability that JPMorgan doesn't have today. But I think we continue to focus on, as I said, sort of the digital investment, ease of doing business. We want to change that mentality of the big bank, right, and make sure that we are as nimble and as easy to do business with as people imagine a fintech to be, for instance. And as I said, just continuing to invest from a banker coverage perspective and making sure we have the right. We have hundreds of people nationally covering these clients and want to make sure that we continue to support that.
Yeah. Do you have any fintech partnerships also in the works, or?
We have a variety of fintech partnerships sort of across the firm. Some are focused more on this innovation economy client base. Some are focused on various sectors and various segments within the firm. It's something that we constantly evaluate, I would say, in terms of as we think about a specific capability that we're interested in building, whether we want to sort of build, partner, or buy. So we spend a ton of time as a firm with fintechs overall to see where we think that offering could be complementary and where we could partner. So it's something that we're always very open to having a discussion about.
And one last thing, I think one thing that made SVB sort of unique in the ecosystem was that they were also this personal bank where founders could just as easily take out a mortgage on their home as they will set up their own startup business, right? And I think that JPMorgan, while having all of those capabilities, maybe doesn't have the same perception in the sense of being easily workable between the personal and the business. So I guess I'm just curious if you are thinking of taking any steps to make that smoother, any procedures or ways to help service your startup clients in a similar way that SVB has and continues to do.
Yeah, no, it's a great question. So first I would say, we have always looked at our client relationships across the firm in terms of it's not about one product area or one line of business, it's sort of what the comprehensive relationship is, meaning the person and the portfolio company, the corporate entity, whatever the case may be. So that relationship sort of based view, is sort of a guiding principle that we have. What I would say is, as we've continued to appreciate just the interconnectivity and the uniqueness, I would say, of the sort of innovation economy ecosystem and sort of the VC community as a whole, to your point, is sort of that need to more seamlessly serve those needs. And that is something that I would say was a big impetus for us back in March, is that we really are managing across the firm, across the commercial bank, across the private bank, across the investment bank, as sort of a seamless innovation economy business for those people within those teams that are serving, those specific, whether it be a VC partner, VC firm, or a founder or a portfolio company. So that is, very much a focus and objective of ours, back to the very broad and global capabilities that JPMorgan has, and just making sure we're delivering them seamlessly to the entire ecosystem.
Seems like we're about over time, so unfortunately no questions for this panel, but thank you so much, Melissa. It was great chatting with you.
Thank you so much. Appreciate it.
Welcome.